Are you wondering about inflation and how it could affect you? Well, Warren Buffett warns us about rising prices, which can be quite concerning. It's fascinating to observe this upward trend in prices as it affects us too. In response, we've had to raise our own prices. Interestingly, people are getting accustomed to these price increases, and it's no longer a major obstacle when it comes to building houses. Manufactured homes and businesses are becoming more prevalent across the country, with 9 of them now under our belt. Consequently, despite the rising costs, the United States continues to construct a significant number of homes. However, individuals must protect themselves from the alarming inflation we're witnessing. In the following discussion, we'll explore Warren Buffett's suggestions for safeguarding against the adverse effects of this rapidly evolving crisis. But before we delve into that, we'd appreciate it if you could give this video a thumbs up. And if you want to see more of our financial and investment content, please don't hesitate to hit the subscribe and bell buttons to stay updated. Without further ado, let's dive in. Warren Buffett's insight. Let's start with a real-world example from Warren Buffett. He pointed out that even if the United Auto Workers secure a 3-year contract, the prices will keep rising. This indicates that we're approaching a period of high inflation, which wasn't foreseen by many. The pandemic severely disrupted businesses across the board, even ones like furniture stores, which had no idea when they could resume operations. Many of these enterprises remained closed for an average of 6 weeks, uncertain about what lay ahead. To everyone's surprise, the problem only worsened, growing from $600 to a whopping $1 billion. Warren Buffett received these numbers in August of the previous year. Regular discussions took place between him and Irvin Blumkin, addressing developments in 3 distinct businesses in Chicago, Kansas City, and Dallas. When people have extra money, they tend to spend more, and a price hike in April has already been announced. So it's clear that prices are on the rise. It's almost like a shopping frenzy, except in areas where you can still buy things due to resilient supply lines. This redistribution of funds from one market segment to another means most people have more money than usual. However, it's important to recognize that many people are still facing financial challenges. Dairy Queen's original stores have become quite renowned, with their takeout locations offering unique twists on classic items. Notably, the company isn't currently susceptible to price adjustments. Most people didn't anticipate this level of inflation just 6 months ago. Inflation has far-reaching consequences, and the idea of repaying international debts in a depreciated currency might become a reality for future politicians. Our nation has policies aimed at boosting items that benefit businesses, and this is a surefire recipe for inflation. Accumulating external debt is a common strategy to manage the costs of that debt. It's astonishing to hear politicians argue that it's acceptable to spend money on things like AIG payouts simply because the funds are already there. Taxes haven't increased in the United States, so citizens are paying roughly the same amount as a few years ago. In reality, the government's revenue this year is more likely to be $2.3 trillion instead of the expected $2.6 trillion. Most of this funding comes from the United States government, but when it's time to cash in these assets, people will realize their purchasing power has significantly eroded due to inflation. This holds true for individuals holding U.S. government bonds. If you refer to costs in terms of users rather than Chinese, it somehow seems more manageable. It's a peculiar situation as news headlines about taxpayers surface daily, yet neither you nor Warren Buffett have seen their tax rates increase. So far, taxpayers haven't had to part with any money, and Warren Buffett believes that a substantial portion of the cost will be offset by a future reduction in the value of fixed dollar assets. At present, we're experiencing higher levels of inflation because it's straightforward and logical. The best way to safeguard yourself from inflation is to generate income for yourself. Whatever your expertise may be, If you're the best at it, you'll reap rewards from the goods and services people purchase, regardless of the money's value. In summary, your ability to make money on your own, regardless of the national currency's purchasing power, is unbeatable. Whether it's a small amount or a substantial sum, the capacity to generate income independently is invaluable. To put it simply, there's no substitute for being able to generate income on your own, regardless of the value of your national currency in comparison to a standard currency. If you excel in your field, you'll be well compensated, and providing subpar services is a great way to make money. If you operate a business associated with a recognized brand like Coca-Cola, it doesn't matter if you hire a specific number of employees in 20 or 50 years. People are now willing to work a few extra minutes for an additional 12 ounces of their favorite product, and this has shifted pricing dynamics. The ability to earn money is crucial, but so is the opportunity to create money in a fantastic business that doesn't require a significant initial investment. Warren Buffett advises investing in yourself to enhance your skills and knowledge, as high initial costs and inflation-induced losses over time make this a wiser choice than traditional investments. When you crunch the numbers and consider today's interest rates, stocks appear to be an attractive investment. Instead of investing in bonds, young individuals would be wise to pursue careers that enhance their earning potential. We've never experienced the kind of monetary expansion occurring now. Though managing near-zero interest rates is a straightforward monetary policy, economic predictability remains elusive. On March 9, 2022, the president announced that 8 out of every 10 Americans would receive a $1,400 check. It's worth noting that just 2 years ago, we estimated that 40% of Americans couldn't lay their hands on $400 in cash. Today, we've distributed funds to 85% of the population, and surprisingly, there haven't been negative reactions. People who receive money are generally happier than those who part with it. Nevertheless, stock prices have risen, businesses have expanded, and voters are content. However, in the world of business and economics, unexpected consequences are a constant. This is why companies like Google and Apple enjoy high returns on capital. They don't require substantial initial investments and consistently generate revenue. If you're inclined to contribute more to the federal government, Warren Buffett owns $100 billion in bonds that generate between 30 and 40 million annually. The pressure is on, which is what economic leaders desire. Nevertheless, everything hinges on how these short-term surges play out. They are pushing the nation to the brink, much like what's happening in Europe. We're assisting with economic strategies, and everyone appears pleased. People will eventually stop being amazed by trillions and regard $1,400 as a mere oversight. Whatever unfolds, time will tell. However, both Charlie and Warren Buffett agree that this is the most captivating narrative they've encountered. On the other hand, non-economists and experts in the field have never seen anything quite like this. The situation reminds us of Winston Churchill's remark about Clement Attlee. He was a modest man with a lot to be modest about. Economists who were initially overconfident are realizing that the real world is far more complex than they imagined. For long-term protection against inflation and to maximize your money's value, Warren Buffett advocates developing your own skills and earning potential. Inflation acts as an invisible tax that few people are aware of. Few people truly leverage their capabilities, and there's no downside to self-improvement. This power can't be taken away from you, and it's the best defense against the eroding impact of inflation. Enhancing your skills in your chosen profession, whether it's medicine, law, or any other field, is the most effective way to shield yourself from rapidly depreciating currency and make the best passive investments. Finally, Warren Buffett considers owning equity in a successful company an excellent strategy to hedge against currency fluctuations. It's astounding to think that when Warren Buffett was born, the US dollar was worth 94 cents, and today it's only worth 6 cents. People who rely on fixed exchange rates are severely impacted by inflation. However, even in the face of substantial inflation, it's possible to make ends meet. If only we had known before our birth that $1 bills would be worth only 6 cents, we might have wished for a different world. While we may not relish this reality, things seem to be progressing well overall. It's crucial to begin investing in your skills now. So when the economic downturn worsens, you won't have to fret, because with the right mindset and aptitude, you can navigate it easily. That's all for today. We appreciate your interest and hope you've gained new insights. If you found this valuable, please give it a thumbs up. And if you'd like to see more insights like this, click the subscribe and bell buttons to stay updated with everything we have going on.